Hey folks, Vic here with a weekly trade video for Friday, July the 9th, 2021. In today's video, I'll go over another short-term trade. And as we've said many times before, whether we trade short-term or long-term, the approach is the same. Okay, we use higher time frame analysis and of course key levels of support resistance from those higher time frames. That's where the greatest strength is usually at. Now for this trade, if you've ever left pips on the table, I think we've all done that at some point, right? This video is definitely for you, and it might surprise you a bit why I did what I did. I'm going to show you why this particular trade was so ideal. I mean, it was a great setup, and I'll show you where I took profit. Okay, most importantly, I'm going to go over my reasoning, and I want you to listen to it because it's just the really critically important part of trade management, why I did what I did. And let me know in the comments if you would have handled this differently, because you might have. And if so, why? Okay, I mean, I know it's hindsight now, but try to be honest and just take a shot at why, what you really believe that you would have done. Okay? And as usual, I would sure appreciate a thumbs up if you like this video, and be sure to subscribe to our channel by clicking the button in the bottom right corner of the video. All right, here we go. Okay, so the trade was on this pair, which is the New Zealand Japanese yen, and let's just go over everything. We actually even look at the weekly chart just to get just a really high time frame perspective on where we're at, even though we're just scalping. I mean, it's not totally necessary, but it can be useful because, like in this case here, this was a level of resistance, the highest close that it made here, and then it was resistance again. It broke through it. It became a bit of support in here and here and here and here. Finally, it caved in, and now it's acting as resistance in here. So it just, if we're at a resistance level here, then, we go to our daily chart and we go, okay, what's going on here? And here's that pretty much the same level. And you can see the lows. See how this was such a good level here? You can see the resistance, and then it broke its support, all in here. Breaks below it, pretty much holds as resistance here, down again, and it hits it again. Now, pay attention. Look at this candle here. I mean, that's just like a very negative candle. Big, huge pin bar reversal. The spikes higher, comes all the way down. That's just, you got to be thinking to the downside on this. We've had this big daily rotation to the downside, and it's all looking pretty darn negative, right? So that's the day before the trade. The trade was on this day, the July the 7th. Okay. Now let's go down to the 4-hour chart, because for scalping we use the daily and 4-hour as our setup time frames, okay, and then we trade it on the 15-minute chart. So here's the day prior to the trade. The trade was on this day here. This is just like if you can see it, and if I zoom this out, by the way, what a nice level this is as well. This is the daily level. Now it's onto the 4. We just put it onto the 4-hour chart. Really good resistance, breaks below it. We're just watching for something to see if it happens around here. Okay. Well, we had this gigantic negative candle, took out these lows in here, closed below it. Very negative. Back to this daily resistance, and then look at this rejection. Right? Another, pin bar, 382 pin bar reversal, really a negative. Now let's go down to our 15-minute chart, our entry time frame, okay? And if I just do this for 1 second, I just want to show you this here. Let me see if I can do this. Yeah. Here's where the trade took place, right up here actually. If I move my cursor over here and you look in the lower left, you'll see it duplicated over there. You can see that after that 4-hour candle was closed, after this 4-hour pin bar reversal was closed, price was down here. We got a real negative candle to work off of here. And if you go back to the 15-minute chart, this setup right here, this big huge drop and a rally back up into here, this is actually known as a set and forget trade. It's a pattern that Darko came up with, and one that he uses in his longer term trading service. Okay, but as I said in the introduction, the approach is the same no matter what your trading style is. Okay, everything we do can be applied to whatever style suits you best. Right? Now, I'd only caution you, don't try to trade a bunch of different trading styles. You'll probably go nuts. You'll probably end up with conflict and overwhelm and ending up quitting trading. Very few people can be taking on all that kind of stuff at once. So You're just money ahead by sticking with one way to trade. The sell, so this drops like this and comes back. We got this nice reaction in here. The sell was up here at 78.06. I had an 11 pip risk in the trade. Now, here's what you need to know. This is a really nice reaction here. We had an FOMC meeting minutes release coming up a few hours later. That's a red flag news event. In fact, that event, it can really cause market movement depending on what was said in those meetings. So I wasn't thinking about trading this very aggressively to the downside. So everything you're going to hear me talk about now is in perfect hindsight. Okay? I mean, in real time, you have to figure out what you're going to do. I got the risk out because it got up 11 pips right away. You can take partial profit at that. Now you have a free look at it. This is short-term trading, guys. Okay, and you got it. This is why you have to distinguish about what kind of a trader you are. And short-term trader, we want to get risk out and get profits, as soon as practical and logical. But call it scalping or whatever you like it. Short-term trading. I just simply used a fib extension from this high to this low to take more profit off down here, and I ended up with just over a 2-to-1 reward risk. Now, look what happened. Smart me got out right here, and look at this move down. That is a move down this is the opposing daily level. That's 165 pips, actually a little bit more than that. A reward risk of 15-to-1. Which is staggering. Now, I could BS you and say I got all those pips, and who's going to know? That's not what happened. Okay. In fact, I posted exactly what I did in our scalp service chat room. So there's no hindsight garbage here. You just got to be honest about these things. That's what I did. But I want you to know why I did what I did. Okay. That's because maybe you'll find it helpful. Okay. I mean, we're all different, but I just want to go over this. I think it's really important. I mean, because we've all left pips on the table before, okay? But the reasons why we do this are important. Is it just psychological? Are you just afraid of, I can't stand the profit or whatever it is, okay? It's important to know that. So here's the thing. I've been trading a very, very long time, okay? And believe me, I have seen many times where doing what I did was the best thing to do. Like, here's where the minutes were released. Price came all the way back, and I thought, aha, here we go. No, it stopped and went down. If this had gone straight up, like this, well, what would you think, right? You'd think that I was some kind of a genius here, right? And that happens. I've been around a long time as a futures broker. I saw this happen many times either way, okay? So, that's just what happens. But when you're in a trade in real time with real money, you need to make a real decision, okay? And listen, by nature, I'm quite conservative with my capital. So I do tend to err on the side of caution on these things. That's just me. That's my personal makeup. We all have, a little bit different tolerances and levels of aggressiveness. You may be different. I have zero regrets about what I did. I mean, next time this might go straight up, I'll handle it the same way. Okay? You can't look back and beat yourself up over that. And I thought it would be valuable to let you know, because it's just so important that you know how you are going to manage a trade and why. Like in this case here, I managed it different because of the pending red flag news. So you need to read the environment like this, make a decision on how you're going to trade manage, and just stick with it no matter what the outcome. This business doesn't come with a crystal ball, right? And listen, if the situation was different, there was no red flag news, I would definitely have been way more willing to hang on to this trade. That's not it, because there's nothing that I could see in front of me that could really hurt me, right? And so that's a whole different animal. You, on the other hand, maybe you're more aggressive and more willing to hang on. Maybe you would have captured all those pips on the way down here, or would you? Okay, you got to be honest about that. Remember, you have the great benefit of hindsight right now. Okay, I didn't have that. So what do you think you truly would have done? I'd like to know about that. Put it in the comments section, okay? Anyway, all I would say is know what you're going to do in these situations. Stick to your plan consistently, okay? You don't want to be, you don't want to flip-flop and do it one way one time and then another way the next. So I hope you found today's video helpful. And again, let me know how you honestly think that you would have handled this trade. I think it would be quite interesting to hear from others about what they would have done. Just consider your own unique personal profile, your own personality makeup, because you know yourself better than anyone. And yeah, leave a comment below. Okay, thank you so much to all of you for listening to this video. I wish you a wonderful weekend and a great week of trading ahead. Take care.